Okay, we are back, and it's time to knock out another drill, which I know y'all just love. And this drill is going to deal with the owner. We're dealing with equity accounts. So we're going to edit, create, and transfer balances for equity accounts. Yay! So in order to do this, we have a few things that our book wants us to do. And the memo came in on January 30th. Again, making adjustments. And we're going to make the original deposit to checking. Should have been $35,000, not $5,000. We need to edit that transaction. The opening balance for notes payable should have been $5,000, not $25,000. We need to edit that transaction. So we got two in this sample company that we need to edit transactions. Next, we're going to create a brand new account, which is our owner's equity account. Yes. And then we're going to create two additional equity accounts, which is, of course, our investment account and our drawing account. So basically, what have we put into the company and what have we taken out? Okay. And then we're going to transfer the amount of opening balance equity into our capital and investment accounts. So, a little bit of fun that's going on here. So let's go ahead and do the first things that it asked. And we're going to edit some transaction accounts. So, we're going to go to our chart of accounts. To the chart, to the chart, to the chart, 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 to the chart, to the chart, to the chart, chart, chart. And we're going to look up opening balance equity. We'll view that registry. We're going to find these accounts. Okay. So, we need to find our deposit, which happens to be this one. Which was a deposit for $5,000. Date is in October. So that's okay with the date, that's fine. All we're doing is editing the amount. So go ahead and click on edit instead of changing it right there. And it wants us to change the 5,000 to 35,000. Okay. And we're going to do our classic save and close. Yes. And we're going to close it out. And it should have refreshed. Doesn't look like it did. We're going to make sure it did. Okay, so we do have the 35,000 there. Now we have to edit another one. Okay, so this is that loan. So we'll find 25. There's our 25,000. And as you can see, we can go ahead and change it right here. It was only supposed to be 5,000. Hit save. Boom. Again, there's two ways of changing these transactions in our registry. Okay, you can either click and change it that way, or change it through on editing. Either way, they're both fine. So we're going to go ahead and get out of this opening because we have changed and edit those transactions. Next, we're going to add our brand new equity account. So, if you remember how to create accounts, we have to go to new. Here's our account, and since this is an equity, our account type, equity, detail type is going to be owner's equity. Okay, and we're going to actually put in our name. So So for me, I put in my name, Professor Naragon, and we're going to put it as capital. Okay. There we go. And we're going to tell save and new because we got to create now our investment and our drawing. So next, all this stuff is still in equity, owner's equity. We're now going to put our name and put investment. Okay, and it's actually going to be a sub account to our capital. So there's our investment. And now we get to do it for our drawing. So again, investments is us putting money into the company, and drawing is withdrawals. So us taking money out of the company. Okay. So we have created all of our little fun equity accounts. So let's find it in our chart so we can make sure they're all here. Looks like we're going to have to refresh. And there's our equity. Okay, so our 3 equity accounts are now locked in. Awesome. Okay, so now we need to transfer the money in to properly show what has been happening in the business. So again, we're going to be making journal entries. Yes. So first journal entry, let's go ahead and put that deposit into our equity. So new journal entry. Okay, make sure it's on the correct date. So again, our period ends for this month on January 30th. And we are going to go opening balance equity. And we're going to debit this account. Why are we debiting? Well, right now, for opening balance equity, anytime that it's a natural credit account. So in order to decrease this account or move money out of it, you need to lower it, which is a debit. So we're moving out and we're putting it into our investments, which is basically a credit account. All equity increases by credits. So transfer owner investment. Okay, and then we're going to put in into our investment account the $35,000. Yay! So save and close. Boom. That'll load up. And then we can see right here, investment account has $35,000 to show our equity is sitting at $35,000, and opening balance equity has decreased to now $5,662.50. Awesome. So now that we got that, we're going to take the rest and actually move it to our capital, because there should not be an opening balance equity account. Basically, it's going to go away for right now. Okay, so we're going to move this little amount. And again, the reason why we did not put it all in investment, because we did not make an investment from this equity. This equity is pretty much from prior years. It's kind of like our retained earnings. So, again, new journal entry. We want to tell it to go to opening balance equity. And again, since it's currently positive, this has to be debit to bring it down to 0. To our capital account. Always make sure you spell capital correctly, since there's multiple ways of capitals. Anyway, there's our capital. Good. Everything's good right there. So we hit save and close. And again, now we can see opening equity is at 0, and our capital account shows the actual full amount that equity was. So we really have 40,662.50 cents of our investment into the company. Of this, we've only invested $35,000. Yay. Not bad. Not bad at all. Okay. So, what happens when we want to withdraw money? Okay. Just like a good old ATM machine, we may actually withdraw money every month or whenever we need to. This also counts if we take any personal expenses. So, how are we going to withdraw? Okay. So we'll find out on January 30th of 2019. We record the monthly withdrawal of $1,000. Yay. We get $1,000 per month. That sounds fine. Okay. So, we're going to write ourselves a check. We all know where we're going. We're going to hit new, and then we're going to hit check. Look at this, check, woo! So, this happens to be check number 71 on payment date of January 30th. And we're going to go ahead and put in the category. We're going to go to our withdrawal. Okay? So we're drawing out the 1,000. There's the 1,000. And notice we're not really needing to choose a payee. If you do need to, which we can, you can always put yourself in as a vendor. So, this is our monthly withdrawal. Okay. Hit save and close. And then the check is done. And again, we're just using the registry. You can see now there has been a withdrawal of $1,000. So, there's a withdrawal. Not much to it. Well, how about another cash investment? Let's do another cash investment. We're going to record an additional cash investment of $3,000. We decided to put more money into the company, which is nice. Now, how do we do this? Well, we have to make a journal entry. So let's make a journal entry. Let's make a journal entry. Yeah. Let's make a journal entry. No. Alright. So, again, we're making a journal entry because we really don't have a bill of sale here. We're not buying anything. We're actually just investing more money into our company. So when we make this journal entry, most likely we're depositing it into checking. And we're going to deposit the $3,000. Remember, checking being an asset account increases by debits. So, we want to know what this was for. This is an additional owner investment. Again, it's always good to leave descriptions, notes, just in case somebody needs to retrace or reconcile. So since this is a contribution, basically that's what it is. It's us investing into our company. We're going to use our investment account. Okay, so investment of 3,000. Again, we're gonna hit save and close. There it is. And if you look, it has now increased to 38,000 from 35,000. Okay, now we all know owners can invest more than just cash. They can actually invest an asset into the company. So we now bring into what would happen if we invest, or basically put into the company an asset other than cash, non-cash investments. Well, we're going to record an investment of $5,000 worth of office furniture. Yay! Because apparently our office needs furniture. And instead of buying it with our checking, we as the owner just decide, here you go. Here's your sign. So, first thing that we need to do is, if we don't already have a furniture account, we need to create one. We already know we do not have one. The only fixed asset they have is the truck. So new, fixed asset, and if we do have furniture, we can put furniture, there it is, furniture and fixtures. Nice. And we're just going to keep it to furniture. Very simple. They want us to go ahead and click the tracking depreciation of this asset. And we're going to put everything at 0. Because nothing has happened as of the date that we're investing. Okay. Then we're going to save and close. And we should have now a furniture. Sweet. So again, since this is an investment, we need to make a journal entry. Anything from the owner is a journal entry. Okay. So again, January 30th is when we invested this furniture. And we're going to use our brand new furniture account. And make sure you go to original cost. Okay, don't just put furniture. We need to do original cost here in online QuickBooks land. And it happens to be $5,000. And we're going to put in investment by owner. Nice. Okay, and of course our investment account gets that little distinguished because again we did invest, we did give that money to them. So save and close. Let's see, everything has gone through. There's our original cost of our furniture, $5,000, and equity right here has now been brought up to 43,000. So real quick, we want a summary of all these items. We're going to go to our journal and reports. So let's find our journal. That was a unique way for them to do that. Not going to lie there. Refresh and pull in our other one. Okay. Now, right here, again, we can see all of our journal entries that we have created at the end of the month. Again, since this is test drive, It does have that Duke's basketball camp. Your beach barkers will probably have other transactions, those adjusted transactions, but this is for all of our owners. So here's our transfer of owner investment, deposit from opening balance equity. Here's the transfer of the remaining capital, our withdrawal, our additional owner investment of a cash, and then investment by owner of the furniture. Okay, so that actually completes this drill of doing all this fun in wonderful ownership items. So next one that we end up doing, let's see, is we're going to reconcile. We're going to reconcile. Na 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 na. Okay, so that's going to be fun. So we're going to show you how to reconcile your checking account in the next part of Chapter 5. So I will see you next time. Again, if you have any questions, please let me know.